Hey, what's up everyone? Welcome back. In today's video, we're going to go over Dogecoin. So Dogecoin right now is trading at 40 cents. We can see that the price itself is coming into a correction phase into this week after failing to attempt to break above a recent high of 48 cents. So we've seen this immediate rejection, and the bulls itself, or interest buyers, wasn't interested in pushing the price even further or even coming up to retest it. So we're seeing a lot of bearish transition here. However, if the price is able to hold above the 78%, I can see Dogecoin continuing this uptrend. But if we do close below our 78%, then the price itself may be in jeopardy of a complete reversal. As we can see, the RSI here is roughly around the 75%, so it is still considered in the overbought territory, and this correction itself may only be starting. As we see in the MACD indicator, this indicator measures momentum, and the histogram itself, or these bars, are getting smaller and they're getting lighter in color. So essentially we're seeing that cooling off period. We're seeing the overbought territory kind of showing us a play here, and we're seeing that correction coming down. The only thing is that, again, we do need to see that immediate support around the 78%. If the price is able to hold above 78%, then essentially this uptrend may continue and a retest of the 48 cents may happen next week. Or if we don't, then we may come down to the 33 cents as an area of our next Fibonacci level. Going into the daily time frame, we are going to see some heavy selling features here. We're going to see that selling momentum continue as we are anticipating, Dogecoin kind of coming up to an area of resistance. We have seen that test yesterday, but most importantly, it is a retest of an area of support here at 78% of our fib. This is going to be extremely crucial because it is near our 20 moving average. A close below these two levels of area of support may confirm a bearish wave, and coming down even more cautionary levels itself, around the 61% of 32 cents. Again, covered in the 33 cents, 32 area, that is going to be around 61% of our fib. That's a very, very steep correction, which is going to jeopardize this overall uptrend. Now, if we take a look at the previous candlestick itself, in terms of the RSI, it did trigger that selling signal here where the RSI is below our signal line. So the RSI and the price may continue to drop so long as we find an area of support. We do see some of our candlestick wicks dated back on November 13th to the 15th coming down to the 35 cents. So if the selling pressure does continue, it may come down to the 35 cents itself. Going into the immediate short term for 4 hours, we can see again the price is heavily dropping down. Some of the candlesticks itself is showing a lot of bearish momentum, most importantly the RSI and the MACD indicator. So starting off with the RSI here, we are considered as oversold, so we may see the price pick up at an area of support. So we need high area of confluence, an area of support, plus the RSI continues to drop itself would give us a nice rebound. So essentially, if we kind of zoom out, we do see the 38% of our Fibonacci level, around 39%, treat it as an area of resistance, but also treat it as an area of support as well, just below the 38%, around the 39 cents. So I'm just going to toggle this a little bit over because this is kind of where we saw some areas of support coming down to the 39. So immediate short term we can possibly find is the 39 cents, so 39.060 as that cushion of support itself. We do see in the immediate short term we have closed below our 2 moving averages, which does confirm this bearish move for the 4 hours. And then the histogram itself is quite heavy in terms of this momentum. Scrolling out, we can see this histogram is matching what we saw in the selling pressure back on November 26th. And if we kind of take a look at November 26th, that's kind of where the price retraced down to these key levels of our dollar amount. So roughly around 39 cents to 41 cents, we may see the price kind of retracing back to these levels before we see that immediate support. As the histograms continue, this may not be the only wave. This may not be, the top of the selling pressure. We may be in the start of it. So even though we see these histograms getting quite large itself, again, it may not repeat the previous wave that we saw, that correction. It may be a lot steeper. So we are anticipating that immediate support here around the 39 cents. But let me know what you guys think down below. Thanks so much for tuning in today, and I'll see you guys in the next one. Bye.